another Monday morning, Monday teaching. All right, so today we are on lesson number 10. And number one lesson, what we did, number one lesson was about trust. So we spoke about trust fund, and I'll just recap. And like I said, if you don't have your insurance in trust, get in touch. And we also spoke about the will. It's very important to have will in place. We also spoke about the 40% inheritance tax. If you have a business, if you have your estate or mortgage and it's more than 325,000, which is the threshold, anything above that, you're liable for 40% inheritance tax. We spoke about the difference between life insurance, because we have life insurance and we have life assurance. And then number 4, we spoke about the difference between terminal illness and critical illness. Those two are different, totally different policies. And then we also spoke, number 5 was, can anybody be insured? Yes, everybody can. So don't write yourself off and say, I have a medical issue, I cannot be insured. Everybody can. And then we spoke number 6, income protection. You can protect your income against illness, sickness, or injury up to 75% of your annual income. And then number 7, we spoke about private medical cover. It's very important to have private medical cover in place, especially people with young children. We have NHS. NHS is free, yes, but NHS right now is overwhelmed. Do not get yourself in that mix. Like, oh, you have to wait for 2 years or you have to wait for 6 months. Guys, get private medical. And then number 8, we spoke about insurance. Is insurance a scam? But is it though? All right. And then number 9, we spoke about critical illness, the definition of critical illness. And then today is the 10th lesson. We're going to talk about relevant life. Okay. So relevant life is more geared or towards companies, directors of companies. Guys, take advantage of this. Okay, so relevant life, how it works, there's advantage and disadvantage actually of relevant life. So first, relevant life, the advantage of relevant life is you can claim back every money you've paid, a very huge percentage of what you've paid every year through corporate tax. Okay, so that's why it's only for companies. So it's only for the directors of the companies. So if you have and your family as well, so you can actually put it down if your wife is part of your company or your husband is part of your company or your children as well or your parents, it doesn't matter. You can take insurance for all these people under the company, and then every year you claim a very huge percentage back on a corporate tax. You're paying my insurance for free. Yay! Why are you not taking advantage of this? And I know it's probably because some people don't know about it, but it's called relevant life. And relevant life, guys, it's like somebody paying my free insurance. I'm on. And then, so if you're taking private medical, and it is only now the disadvantage of relevant life, it's limited to what you can take and to what term you can take. Now, for private medical, you can, it's not limited for private medical. So private medical, you can take it with your family, and as a family man who's a director in a company and you have your children, you can take it, pay through your company accounts, and every year you can claim a very huge percentage back on corporate tax. Private medical, you can take it, pay even if it's 500. You can make sure, like, if a company is paying for you, take the best, because with private medical we have some add-ons like audiological, dental, eye, those are add-ons. Mental health, those are add-ons. Or paying excess, take 0 paying excess. Outpatient, take full outpatient. That is a lot of money end month. But if my company is paying for me, why can't I have the best in place for my family? And then every year you get a very huge percentage back through the corporate tax. So that's private medical. No limitation on that. Now, we come to life insurance. The advantage is you get some percentage back as a corporate tax. The disadvantage is you're only allowed to take life insurance up to the age of 75 if you're taking through relevant life. Now, the normal term for life insurance is up to the age of 90. So almost every a provider will give you the term up to the age of 90 for life insurance. Now, if you're taking it through Relevant Life, that is through your company, you're only allowed to take up to the age of 75. Now, what's the advantage of that? Advantage of that is by the time you're 75, liabilities, because the reason why we take, most of the time we take life insurance, also is about liability. Your children are grown up. And I know, yes, there are some people who start having family at a later date, which is also fine. We have people who are 60, that's the time maybe they have a 3-year-old, a 4-year-old. So that means that by the time you're 75, your children are still really young. So probably that won't be good for you. But if you're someone that by the time you're 75, probably your last born is 25 years already, or your last born is over the age of 23, which is they're not your dependent anymore. And also, if you have a mortgage, by the time you're 25, you've paid off all your mortgage. Those are liabilities that push us to take insurance. Now, by the time you're 75, none of this, you're free from all this liability. So if you take the insurance with Relevant Life up to the age of 75, you're good. So when you get to 75, now the lump sum that you took is gone. You're still alive. Hooray, we thank God for that. Now you can just think of taking funeral plan. Okay, I know by the time you're 75, some people say, oh, I don't want to talk about funeral plan. Come on, guys. Come on. We need to tell God thank you for even allowing you to get to 75. So from there, you can now take a small funeral plan that if you pass on, you're still not going to disturb the society and the community. Oh, I'm chango here, I'm chango there. Or you're not going to disturb your children. Oh, how are we going to now bury mom or bury dad? We have to take a loan. You have something small for your funeral cover. Okay, after the age of 75. Now, if you take it through Relevant Life, which is through your company. Now, critical illness as well through Relevant Life, you're only allowed to take it up to the age of 70. Okay, normally a lot of providers out there will allow you to take critical illness up to the age of 80. Some will take you up to the age of 80. Some will even take you up to the age of 85. That's for critical illness. Okay, but mostly is up to the age of 80. They don't really pass there. Now, with Relevant Life, you can only take it up to the age of 70. Again, we're coming back to liability. So now you don't have any liability anymore. You can just take it up to the age of 70. When you get to the age of 70, you can maybe take with the company that now will give you 10 years, because it's up to the age of 80 probably, take another critical illness out. Yes, it's going to be so expensive. Or you can say, you know what, it's fine. I've reached the age of 70. Thank you, God, that I wasn't diagnosed with any critical illness. Now I'll just not take it anymore, which is fine as well. So that is the advantage and disadvantage of Relevant Life. So you can think as somebody who has a company, should I take this? Should I not take this? We have some people who teach their children are going to private schools. So just imagine something happens to you. What will happen to your child who's in private school? That means they have to now stop going to private school because probably you didn't have life insurance to continue with the same private school that they were going to. All right. So that's why I say by the time you're 75 or by the time you're 70, probably liabilities is gone. If you're someone who takes your children to private school, they're finished. So you don't have anything to worry about so much. Okay. So if you're a director of a company, guys, please get in touch and we give you something called the Relevant Life. And like I said, speak to your accountant first and ask your accountant if they've had anything called Relevant Life or how they can help you through with you taking Relevant Life. And then once your accountant says it's fine, or once you feel like it's okay, please give us a call. You can call me. My number is down there. You can write me an email. My email address is down there as well. Or you can actually contact the office as well. They will be happy to help you. So anybody who has a company, think of Relevant Life. Think of paying through your company and think of the huge percentage that you'll get back. Guys, if somebody tells me that you can even get 10% back, trust me, I will run and just take that 10%, because that 10% is still a lot of money. If you think of every year for like 40 years, that 10% is still a lot of money. So guys, Until then, I'll leave you with that. So this week it was about relevant life. Until then, I'll leave you with that. Take care of yourself, and I'll see you again next week on Monday in our Monday teaching. God bless.